These two ETF portfolio can replace and surpass your full-time job, $17,000 plus month. Your accelerated path to abundance. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. First, let's have a candid chat, just you and me. You know, like friends sharing a coffee. The average full-time worker in the US earns around $62,000 a year. On paper, that sounds decent, right? Enough to pay bills, maybe a small vacation, some comforts. But here's the rub. You're trading roughly 40 hours a week, every single week for decades. You show up, you work hard, you follow the rules. And if you're diligent, if you contribute steadily to your 401k, the average person ends up with about $244,000 by retirement. Think about that. After a lifetime of effort, that's the average reward for those approaching their golden years. Now, $244,000 is certainly something, but let's be honest, it's rarely enough to truly replace a full-time income. It doesn't fund the kind of boundless financial independence most people dream of. These aren't just hypotheticals. These are real numbers from sources like the US Bureau of Labor Statistics. It paints a clear, if uncomfortable, picture. For many, the traditional path leads to a retirement that still feels tight. So, the burning question becomes, is there a smarter way to play this game? Because if the conventional playbook isn't leading to true financial freedom, then maybe, just maybe, it's time to write a new one. And that's exactly where our 2 ETF strategy steps in. Part 1. Your dual financial mission, income and exponential growth. My own financial goal was simple, yet audacious. To build a steady stream of income that could not just match, but dramatically beat what the average retirement plan offers. We're talking something in the ballpark of $15,000 a month in passive income. Imagine that. Money flowing in, whether you're working or enjoying life. For this, I found one incredible ETF that does the heavy lifting, becoming your income engine. Then, there was the second, equally vital goal, to grow a portfolio that could confidently hit 7 figures over time. Not by gambling on the next risky stock, but by systematically stacking solid, reliable growth year after year. That's where our second ETF comes in, your growth rocket fuel. So, yes, 2 clear goals, 2 distinct ETFs, but one cohesive plan that could fundamentally change how you perceive wealth building. And it all starts with embracing a powerful, often overlooked truth in the world of finance: simplicity. Part 2. The unexpected power of simplicity, your secret weapon. The financial world thrives on complexity, doesn't it? There's always a new buzzword, a hot new trend, a dazzling chart promising instant riches. CNBC runs 24/7 for a reason. It's built on the seductive idea that more information equals better decisions. But here's the quiet, uncomfortable truth. More complexity often leads to worse performance. Think of it like tending a garden. If you plant too many exotic, high-maintenance plants, constantly fussing with each one, you often end up with a tangled mess. But if you pick a few hardy, proven varieties and give them consistent care, you get a thriving, bountiful harvest. Study after study confirms this in investing. Most actively managed funds, those with the highest fees and the smartest sounding managers, consistently underperform the market. Why? Because complexity breeds mistakes. Overtrading, emotional decisions, chasing fleeting trends. The legendary Warren Buffett has repeatedly advised against trying to beat the market. His mantra? Own the market. Buy simple, low-cost, diversified funds and hold them for the long haul. John Bogle, the visionary founder of Vanguard, put it even more poetically. Don't look for the needle in the haystack. Just buy the haystack. That's the beauty of the two ETFs we're discussing today. They aren't the flashy meme stocks making headlines. They're your financial workhorses. They've consistently grown, paid dividends, and weathered every market storm, while most people were glued to their screens, second-guessing themselves. Simplicity grants you clarity. It frees you from decision fatigue. You don't have to agonize over what to buy next or when to sell. You just stick to the plan. A plan built on decades of proven evidence, not daily predictions. The real edge in investing isn't being smarter than everyone else. It's being more consistent. Most people falter not because they pick the wrong investment, but because they abandon a good one too early, panic in a downturn, or get distracted by the next big thing. So, the question isn't, how do I beat the market? It's, how do I stop getting in my own way? And the answer begins with picking the right tools, the right ETFs, and letting them do what they were designed to do. Part 3. Handpicking your financial champions. Our selection strategy. With literally thousands of ETFs out there, narrowing it down to just 2 might sound like a wild card. But for us, it was less about guessing and more about filtering for pure performance and reliability. So, let's break down the exact blueprint for how I selected these 2 champions for our financial freedom strategy. First, I looked for funds with a strong, undeniable track record. Not just beating the market for a year or two, but showing remarkable consistency through bull runs, market corrections, and everything in between. We're seeking funds that don't just shine in one condition, but endure and grow through all of them. Next, a critical focus on dividend yield. Why? Because dividends are the heartbeat of passive income. They're tangible cash payments, a reward just for owning a piece of the pie. But I didn't just chase high yields. I searched for sustainable dividends, meaning the underlying companies within the fund have the financial bedrock to keep those payments flowing and, ideally, increase them year after year. That leads us directly to dividend growth. It's one thing to get paid today, but it's a whole different ballgame when those payments grow year after year. The quiet power of rising dividends is often underestimated. It's what transforms a modest income stream now into a roaring river of cash flow later, allowing small increases to compound into thousands in monthly income, without you adding an extra penny from your pocket. In just a few moments, I'll show you an ETF that could turn a $10 daily investment into a portfolio paying over $15,000 in monthly dividend income, and another that transforms that same $10 a day into a massive $2 million retirement fund. Beyond income, I scrutinize share price growth. Because while cash flow is king, you also want your portfolio itself to expand in value. This is where the magic of compounding truly takes over. The longer you stay invested, the more those gains begin to work on top of each other, creating a powerful snowball effect. Finally, I delve deep into the holdings of each fund. Who are the actual companies inside? Are they industry leaders? Are they financially robust? Do they create products and services people rely on, regardless of economic winds? So, our strategy blends 2 distinct forces. One ETF built for pure income growth, boosting your cash flow with rising dividends through a disciplined, value-based approach. The other is a powerhouse designed for long-term capital growth, driven by the titans of global technology. Part 4. Champion 1. SCHD, your steadfast income anchor. Let's talk about the first half of this dynamic duo, the income engine. Its name is SCHD, the Schwab US Dividend Equity ETF. SCHD is not just respected, it's practically revered in the world of dividend investing. Its stellar reputation isn't built on fleeting trends or hype, but on its rock-solid ability to deliver strong, consistent income and stable capital growth through high-quality US companies. Think of it as an ETF designed for investors who want to build serious wealth without the constant anxiety of checking charts or reacting to every news headline. Historically, SCHD has been a steadfast performer. In a volatile recent year, it still delivered a respectable 1.9% return. Over the past 5 years, SCHD gained 47.66%, a testament to steady capital appreciation. And zoom out to a decade, and SCHD has more than doubled in value, gaining 100.25%, all while consistently paying out those coveted dividends. The genius of SCHD lies in its holdings. These aren't speculative startups. They are well-established, immensely profitable companies generous with their dividends. We're talking household names like Coca-Cola, Verizon, Altria, Lockheed Martin, Cisco, PepsiCo, Home Depot. The top 10 alone make up about 41% of the fund. These are the giants that generate consistent revenue, resilient even in economic headwinds. Its sector breakdown tells a story of stability, tilted heavily towards consumer defensive, energy, and healthcare. These are the essentials, products and services people simply can't cut from their lives. SCHD also includes a healthy dose of industrials and tech, adding efficiency without diluting its core mission. Now, let's look at the numbers that define SCHD's appeal. A dividend yield of 3.97%, significantly above the market average, providing a robust baseline of income. But the real magic is its 10-year dividend growth rate, over 11.3% every single year. Couple that with a 7.02% average annual share price appreciation, and SCHD achieves a rare balance. It grows your capital while it grows your income. And the best part? An ultra-low expense ratio of just 0.06%, ensuring more of your hard-earned gains stay right where they belong, in your account. This makes SCHD not just reliable, but incredibly efficient for long-term investing. Part 5. The SCHD trajectory, harvesting $17,000 monthly. Alright, imagine this. You start investing just $10 a day into SCHD. And every time that glorious dividend payment hits your account, you don't spend it, you reinvest it. This is where the magic begins. After just 1 year, your consistent $10 daily habit would total $3,650 invested. This is the seed money for your future forest. Stay consistent, and by year 10, that seed would have blossomed into a portfolio worth around $65,000. Keep going, and by year 20, you're looking at about $320,000, all from that powerful, disciplined $10 a day habit. Now, lean in, because this is where it gets truly exciting. By the time you hit year 30, your portfolio isn't just growing. It has crossed into legitimate millionaire status, sitting at roughly $1.79 million. These numbers aren't just theoretical. They're based on SCHD's consistent historical growth and the power of reinvestment. But here's the most compelling part, the true reward. The dividend income you'd be receiving by year 30. We're talking $199,000 annually, or around $17,000 every single month. The total value of that portfolio stands at $1,883,000. And here's the kicker. Over $1.2 million of that doesn't come from market price fluctuations. It comes directly from those reinvested dividends. More than 57% of your wealth in this strategy isn't from trying to time the market. It's from owning an ETF that pays you, and then letting those payments work tirelessly for you. Now, let's ignite the second stage of our financial rocket. Part 6. Champion 2. QQQ. Your explosive growth rocket fuel. If SCHD is your reliable income anchor, then the Invesco QQQ ETF, ticker symbol QQQ, is your undeniable growth rocket fuel. This is one of the most recognized and heavily traded ETFs on the planet, and for excellent reason. It tracks the Nasdaq 100 index, giving you direct, streamlined exposure to 100 of the largest non-financial companies listed on the Nasdaq. These are the true innovators, the market disruptors, the powerhouses shaping the very future of the global economy. Over the last decade, QQQ hasn't just shown consistent performance. It's delivered dominant performance. Look at the numbers. In the past year alone, QQQ is up an impressive 15.47%, showcasing its resilience. Over the past 5 years, it delivered a stunning 122.05% return. And if you zoom out to a 10-year view, QQQ has absolutely skyrocketed by 381.11%. This is the kind of explosive compounding that separates average retirement savings from truly life-changing wealth accumulation. So, what fuels these phenomenal returns? It's all about what's inside. QQQ is heavily weighted toward technology. Over half its portfolio is in tech companies. This means you're investing directly in innovation and scalability, businesses that grow at incredible rates and dominate global markets. You'll find industry titans like Microsoft, Nvidia, Apple, Amazon, and Broadcom as top holdings. These 5 alone make up more than a third of the entire ETF. It also includes giants like Meta, Netflix, Tesla, and Alphabet. These are the concentrated bets on the winners of tomorrow. Part 7. The QQQ trajectory, building a $2 million fortress. Now, QQQ's dividend yield is lower, around 0.58%, and that's exactly what we expect. These companies prioritize reinvesting their profits back into their businesses for hypergrowth, rather than paying them out as dividends. But don't let that fool you. Over the last 10 years, QQQ has still managed to grow its dividend payouts at an average rate of 10.3% a year. So, while the income is small today, it's quietly growing in the background. But the true star here is the share price growth. QQQ's average annual return from price appreciation alone is a staggering 16.78%. If that trend continues, your money could more than double every 5 years. That's the kind of compounding that turns a modest start into monumental wealth. And in terms of fees, QQQ's expense ratio is a competitive 0.2%. Incredibly low for the access you're getting to the most innovative, high-performing companies on the planet, all without the headache of picking individual stocks. Alright, so what happens when you apply our $10 a day habit to QQQ, with dividends reinvested? After year 1, you'll have $3,650. After 10 years, your portfolio will have swelled to about $82,000. Keep going, and by year 20, you're looking at an impressive $478,000. But by the end of year 30, you've entered a whole new league. Your portfolio will have reached around $2.36 million. By year 30, you'd be receiving about $1,700 per year in dividends, or roughly $150 a month. Again, not life-changing income yet, but remember, QQQ's primary mission isn't immediate income. It's to grow your capital to a level where you have absolute flexibility and total financial independence later. Out of that magnificent $2.36 million total portfolio value, roughly $2.34 million comes from sheer capital appreciation, pure, explosive growth. The remaining $17,000 comes from those steadily reinvested dividends. QQQ is a compounding machine, not a cash cow, and it thrives for investors who have the time, patience, and unwavering discipline to let growth snowball. Your grand finale, a future reimagined. At the top of this video, we set out with 2 audacious, yet achievable goals. First, to grow your money into a truly life-changing amount, and second, to create an income stream so powerful it could rival, or even replace, a full-time job. Now, with both SCHD and QQQ laid out, you can see how they are perfectly designed to deliver on those goals. SCHD is your unwavering promise of income. It's not just about earning dividends. It's about those dividends growing, compounding, and eventually taking on a magnificent life of their own. 30 years from now, SCHD alone could be paying you around $17,000 a month, a staggering figure well above the average American monthly salary. QQQ, on the other hand, crushes the growth side of the equation. It doesn't flood you with cash up front, but that's not its purpose. It's engineered to take your contributions and scale them rapidly, building a formidable fortress of wealth. By year 30, your QQQ portfolio alone would be worth over $2.3 million, absolutely dwarfing the average 401k savings amount. That's the kind of number that grants you real financial freedom, not just to retire, but to live life entirely on your terms, whenever you decide the time is right. SCHD gives you the consistent, growing cash flow. QQQ gives you the exponential wealth growth. And together, they build you the perfect income and growth portfolio that can truly redefine your future. Call to action. You might spend your whole life working full-time for a $5,000 a month salary, which some people argue is a small reward for decades of effort. Or you could invest $10 a day and let 2 ETFs do the heavy lifting. One builds income, the other builds wealth. Together, they could retire you with a $2 million portfolio and pay you $17,000 a month passively for life. This isn't just a video, it's a doorway to a different kind of future. If you found hope, clarity, or excitement in what we discussed today, I urge you to take a moment. Please hit that like button. It's a small gesture that helps us reach more people who are ready to take control of their financial destiny. And if you want to keep receiving insights that can truly accelerate your wealth journey and secure your financial independence, be sure to subscribe to our channel and ring that notification bell. Finally, I'd love to hear from you. Comment below with your biggest takeaway from today's discussion, or what your ultimate financial dream looks like. Your engagement fuels this community. Thank you for watching. Here's to a future where your money works as hard for you as you've worked for it.